traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It's Wednesday, 15th day of July, 2015, and this is the daily report for gold and silver. Following a strong dollar, which follows on the footsteps of statements made by Janet Yellen today in her semi-annual conference with the House, in which she said that rate hikes are likely this year, and we could even expect 2 of them. The actual timing of the hikes is not as important as actually putting the principles into place, so to speak. We do have gold trading off this morning, according to eSignal, off $5.30, below 1150, 1148.20. We've seen a trade to a low of 41.90 and a high of 55.80. In terms of the dollar strength in that change, according to Kitco, we're down about 6.10. $5.80 of that 6 lower pricing is dollar strength, and virtually unchanged in terms of normal trading. Now, in terms of the percentage gain, you're looking at almost a 0.5% lower, but nothing like what we're looking at in silver, which is down 1.63%, once again flirting with $15 per ounce. 15.06, that's our current print. The low 14.96 and the high 15.36. More on silver in a little bit. So traders, what are we looking at? Well, as you know, I have been looking for lower pricing in the precious metals, gold and silver. We have been receiving that. The interesting thing is the area that we are currently at and whether or not we find some sort of support. And I draw your attention to the moment we actually went, I believe that this is around 41. That's the most recent lows that we have had. That happened March of this year. It also completed a third wave. Our fourth wave is what took us back up to these most recent highs at 1221. Absolutely, we saw the resistance here. We're also at this point seeing this very, very strong downward channel line that we have been really identifying and witnessing the market staying within the boundaries of that. And as I said, what's interesting is this low that we made. I don't see any real reason or rationale to find support in this area. And of course, we're hoping, or waiting, I should say, for a bounce to the upside, the completion, of course, of this 1, 2, 3, 4, 5 to go into really some sort of an A, B, C, and it would be at this point here at the top of C that we would look to initiate a short position. As I said, in this particular scenario, we're best off either selling into the sell-offs or selling into rallies, but certainly not buying the dips. Now, we haven't been selling into the sell-off because my belief was, and still is, that we could see some potential support kind of pop in this area, bringing the market back up a little bit and allowing us to position ourselves in a much more eloquent manner, meaning having a good position or entry price into a short play here. Now, in terms of where we think the market's going, we talked about some of the projections that we were looking at, but in essence, and this is longer term, but my sense is long wave 3 down, wave 4, Wave 5 could take us, as I said, as low as about, call it 1080, 1083 in that area. That is where I believe that this market could most certainly be headed. So traders, we took a look at this chart, a half-a-day chart in Japanese average format. As you can see, I've just converted it back into a candlestick chart. And I want to go ahead and kind of blow this up a little bit because we see another distinct item within this market in terms of looking at it on a technical basis. For the better part of the last couple of days, we traded, as you remember, yesterday in that real narrow, call it a $10, $12 range. You had a couple of candles that actually were slightly green, but very, very small bodied. And then you get this dramatic sell-off. This is what's taking us to lower pricing. This, of course, being our low that matches at around 1141. And so we've seen this happen before. In other words, the market comes down, you get a series of consolidation, and that's why we're moving back into a candlestick format to see true opens and closes. Then you see that spike down. It'll retrace a little bit, you get that sideways trading activity and then another spike down to a lower low. So if you take a look at these recent lows here, here, and here, we have now, as you can quite elegantly see, have a whole series of lower lows as this market has moved to lower pricing. So there's absolutely nothing on a technical basis that really conveys to us that we're finding any kind of support. We'll have to see what happens in this area. Of course, they are now having riots in Greece, so that scenario is certainly not playing out in a quiet manner, in a manner in which something that's resolved would. There's still some real details that need to be worked out, so we'll have to see how that all unfolds. So traders, lastly, I do want to cover silver, and silver has been under fire and under pressure over the last 3 trading days, looking at a daily chart. What I find noteworthy is as follows. We have this long move down in which market's coming down from about 770, touches to these lows, call it 1460 right in here. We then get 3 up days and almost a shooting star. The reason you can't call it a shooting star is look at the size of the tail below it. It's almost like a long-legged doji, but it's absolutely that consolidating candle, and also can be looked at as a star when you look at the body size. You get a completion of a 3-river evening star candlestick-wise right there. That's your 3-river evening star pattern. This is your confirmation. So aggressive traders, you can enter this market from the short side. Initial target would have to be around 1450, but the 3-river evening star has confirmed in terms of our daily candles. It's an aggressive trade, which is why we haven't put it out on the wire, so to speak. But for those that listen to the report and watch the report on a regular basis, this is actionable information. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.